Mortgage giant Fannie Mae says it will start considering on-time rent payments in home loan approvals. The mortgage lending giant will look at the last 12 months of rent payments when considering whether to lend. Rent is not currently considered by the three biggest companies that calculate credit ratings. Many times, this locks people out of the buying process by not factoring these on-time payments in. Fannie Mae said about 17% of applicants over the past 3 years would have been approved for a mortgage if their rent histories had been considered. The new policy will go into effect Saturday. For more information on this, I want to bring in Cecilia Isaac. She is the Chief Lending Officer of OneUnited Bank. Cecilia, welcome. Great to have you with us. So mortgage companies normally ask for 12 months of bank statements. So what's really the change here for prospective home buyers?
Well, it's a significant change, and it's a significant change because Fannie Mae is going to include how you pay your rent over the past 12 months in terms of evaluating you for loan approval. If you have a relatively low credit score, because Fannie Mae will allow you to qualify for a loan if your credit score is as low as 620, but that's a pretty low score. Considering the mortgage payments, or rather rent payments, could lift that. You know, right now, credit bureaus don't report rent payments for the most part unless a landlord chooses to do so. This will allow anyone who's interested in having their rent payment history counted. Fannie Mae will need their approval to do so.
So this won't be a new requirement. It will be information that is added to the mortgage application voluntarily?
Voluntarily. If you don't want to use the information, you don't have to. And the important thing to also note is that should you desire to use the information and you give them permission to do so, and the results are not as positive as you thought they were going to be, it won't count against you. You can still reapply and move on with the normal process.
That's great information. And Cecilia, we do know that unfortunately there is still a significant racial gap among homeowners. Do you think this policy could help narrow that separation?
Oh, I absolutely do believe it can help narrow the separation. The one thing people normally do is pay their mortgage. Well, rent is similar, and rent hasn't been counted in the past. And that's been a significant drawback. And allowing this to count allows the borrower to have additional support in getting that loan approved. I think it is a game changer. I recently went back when I heard about this and looked over some of our files and found there was a significant number that could have been given a loan had this been the case.
Very interesting. And so do you believe that Fannie Mae also is benefiting from this change?
I do believe, first of all, Fannie Mae was designed to improve home ownership. That's its original mission. And making this change will boost home ownership. Making this change allows people who have been locked out to now participate. And that's very, very significant. Fannie Mae has been making several changes in the most recent months to encourage not only home ownership, but allow people who may have been locked out of the refinance market in these very low rate times to participate. So I applaud them doing so, and I do think this is a great benefit.
And so, Cecilia, do you think that there are other programs or other considerations that should also be in place to help more people qualify for mortgages?
Well, I do think so, because home ownership, for the vast majority, when you're doing it for the first time, is challenging, is a mystery. There are more things that can be done to educate people on how the process works and educate them on how they too can become a successful homeowner. It's not just qualifying for the job, but it's what you do, not qualifying for the loan, but it's what you do after you become a homeowner. Certain things are important. Programs that Fannie Mae has recently put in place will help. There are other areas that I can think of that could be additionally supported to help people who may be somewhat challenged, but do exhibit through other factors a improved credit risk if you consider those other factors. The bottom line is, will you pay your mortgage? And there are other indicators that can support that right now are not considered.
Well, Cecilia Isaac, Chief Lending Officer of OneUnited Bank, thank you so much for joining us. We appreciate you sharing your expertise in this department with us.
Oh, thank you so much for having me.